Hi, this is Paul Hitchcock. Really excited to have Lynn Schmidt, the tax and financial doctor, with us today. Looking at my notes here, you and I were talking a little bit offline. Lynn is going to be talking about changes in withholding. New tax plan out. A lot of people, you said, Lynn, are asking about this. So what's going on with changes in withholding?
Well, actually, Paul, the changes happened last year. So we knew the tax law changes were coming last tax season. Even though we didn't have all the details, we knew they were coming. And one of the things that changed were the withholding tables. IRS put out mandates that told employers they had to comply early part of the year and adjust folks' withholding. And because the tax rates went down, we anticipated that people would need to make changes to their withholding through their employer. And some folks did, and many folks did not.
Right.
And so even though we had changes, they were anticipating that things would still be the same old, same old. If they would normally get a couple $1,000s back during tax season, they were anticipating they were going to get that back again this tax season. And we're finding that that really is not the case with the changes in the withholding rates compared to the changes in the tax rates.
So this is withholding for W-2 employees working at a company. Is this what you're talking about?
That is correct. That is correct. Because the tax rates went from 2017, were basically the first three brackets of rates were 15%, 25%, and 28%. And for the 2018 tax year, they went to 12, 22, and 24. So because those rates dropped, the withholding tables really were not adjusted well, and it was a very confusing process. Most folks did not understand how they needed to adjust their withholding, and they left it the same. So what they found was, hey, great, during the year they got more money in their paycheck during the year, and that was all well and good. Right. But what they didn't realize was come tax time, that money that they were getting pro rata each paycheck was actually part of that refund that they would have otherwise anticipated to get during tax season. And so now they're not happy when it comes time to completing their tax return for 2018.
So what do you do? So with somebody in that situation, can they, I mean, do you recommend they amend something at the end, or is it too late and then just adjust it for next year?
Yeah, it's too late. And now that they see the writing on the wall and they understand how it's affecting them, because their first instinct was to say, oh, this new tax law, I'm paying more in taxes. They're not, and we've been able to show them by doing a side-by-side comparison of last year's income and this year's income that their overall tax rate, for the most part, has actually decreased. What changed is the items they're either able to write off because now the standard deduction is so much higher, but they lost personal exemptions. So there's another change. So with the combination of those moving parts, we're able to show them that it's really a cash flow situation between last year and this year, where they probably got the money during the year and they're not getting it at tax time. So now what we're doing with folks is after they see the picture, if they don't like the outcome and they actually like that little bit of cushion on their tax return, we're helping them adjust their W-4 form. So now they have the bulk of 2019 and they're holding at a more accurate level.
So this sounds like great information, Lynn. And so the idea is, if somebody isn't sure about this, someone who's listening here, then they get with you and you'll run a projection for them as kind of a cash flow projection for the next year, and they can change their withholding at any time during the course of the year?
That's absolutely correct. And it's not really a cash flow projection, but really an analysis of their tax return. Part of that analysis, that when we look at their tax return, we're also going to be looking for other tax saving opportunities. Because after all, as an enrolled agent and a certified tax coach, I not only want to help taxpayers pay the lowest legal tax possible, but I also want to help them better understand their personal tax situation. So if we see missing opportunities on their tax return, we're going to bring those to their attention as well. But yes, then we'll do a W-4 analysis and see what they should be withholding for 2019 to try to make them come out even. I know a lot of folks like to use their tax return as a tax saving mechanism or a financial saving mechanism. But let's face it, why give the government an interest-free loan during the year when they can have use of the money? Put it in their own savings account, put it aside as a beginning of a savings or an emergency fund, if you will, for their family. And then come tax time, if they break even, it's all good. They've already got the money saved as opposed to having spent it all year long.
Love it. Love it. Always great information, Lynn. Really appreciate you coming on. Thanks, everybody, for listening. And Lynn, we'll do it again soon.
Sounds good, Paul. Thanks so much.
All right. Bye-bye.